Hi everyone and welcome to today's morning report with me, Rich Perry, market analyst at Tech Markets. The European trading session has got off to a pretty positive start. Actually, it's Non-farm Payrolls day, and normally on Non-farm Payrolls day we see the markets consolidating in front of the data. However, we've seen a pretty strong start. European markets up around about 1% across the board, and that's not really on a great deal of steer out of Asia or Wall Street overnight, both of which were pretty much flat. But we have seen a bit of an uptick on the oil price, and let me just show you also the fact that volatility is falling away, but also a slight uptick in oil price. I mean, that even came after a massive correction intraday yesterday into the close, where the oil price closed towards the low of the day. But still, there's a bit of a rebound again today, so that has helped sentiment, I think, improve on these markets. And we're pretty much seeing a very, I mean, even on the treasury yields, there's no real uptick either. So it's a very curious move that we're seeing on these equity markets today. Whether it will last remains to be seen, because normally markets tend to consolidate in front of that payrolls decision. So it will be very interesting to see how this one plays out. But still, we have got this payrolls data, and the expectation is for 203,000. That is obviously better than the 173,000 we saw last month. But the sort of smart people tend to look past that payrolls data, because it's sort of there or thereabouts, sort of give or take 30 or 40,000 pretty much every month at the moment. So you sort of look past that data, I think, and look towards the more interesting aspects of the employment situation report, which is the certainly the first of all, unemployment, but that continues to fall away. But I still believe that the important bit of the report comes with the average hourly earnings, which last month actually ticked higher by 0.3%, which actually improved the data. However, this month is again 0.2% is expectation there. So it's expected to sort of only really maintain that sort of level of average hourly earnings. I mean, you're not really seeing average hourly earnings improve at all on the year-on-year basis, and year-on-year basis around just above 2% on that. So, and that's been like that pretty much for the last 2 years now. So really not moving on at all in terms of earnings growth. And considering you've got unemployment continuing to fall away, that is an interesting factor, because the Fed still sees 5% or around about 5% as its sort of full employment level. So that would suggest that at this sort of stage you should be seeing earnings growth. Well, you're not really seeing that coming through. So maybe they've either got the sort of full employment level wrong, or the fact is that participation rate continues to fall away as well. So that's could be a function, or could be driving that unemployment rate lower. But sort of all different economic aspects to this report, but certainly in front of it, the markets are looking pretty strong, pretty risk positive, because you've got across the board the forex majors, which are relatively positive. The more safer haven plays, sort of euro, which has become a carry trade, and also the yen, which is weaker as well. So interesting moves on these markets. That takes me to my chart today, which is the Aussie, and this is sort of in line with this improvement in risk in the sort of past couple of days. Really, we've seen the Aussie start to turn a bit of a corner. There was a slight potential for a base pattern, which I'll show you in a minute, but that resistance at 70.40 was broken on an intraday basis, but closed back below with a bit of a disappointing candle in the end. But still, the market is holding up and testing that resistance once again, 70.40. But look at these stochastics lines, which are beginning to turn higher. That could be a buy signal. The last time we saw one of those was back at the beginning of September, when we saw that rally into about 2-week rally, in fact. So that could be seen. But generally speaking, it's still fairly much a selling into rallies market for a medium-term perspective. But very near term, as I said, we've got this slight sort of base pattern going on. This is the hourly chart. You can see that base pattern pretty clearly, actually, 70.40, and looking to complete yesterday. Failed on a daily close basis, but still that really is testing that 70.40 level. And it'll be interesting to see if this sort of sequence of higher lows can continue today with this payrolls report. So you'd be looking out for yesterday's low, which is 69.95. if that sort of stays intact, then the prospect of this being a base pattern will continue. But if you lose that, you could quite quickly come back towards the 69.35 key low, and that would be a bit of a disappointment, certainly considering this slight improvement over the last few days. But non-farm payrolls will create volatility, even though it's not really expected to do a great deal. It's expected to be a fairly sort of middle of the road report, so we'll wait and see how it turns out. But I wish you good luck in your trading on the Aussie and whatever you're trading today, and I'll speak to you later. Thanks.